So, guys, how are you all doing? I hope you all are doing well. So, guys, we are going to be based off on today's episode. We are going to be talking about. I know you guys might have heard about this name before, based off on we have liquidity, we have liquidity sweeps and liquidity grabs. So, guys, based off on today's session, we're going to be talking about liquidity sweeps, and liquidity grabs. So, when it comes to this bad guy, I keep telling you guys that I like you guys like I just want you guys to like this shit is just like something like make sure that trading is just like as simple as ABC for you. I don't want you guys to twist trading. I don't know if I'm making sense. Let's say now, for example, now this word right here. This way right here is just like liquidity and liquidity grabs are just like, let's say for example now we have something like this. Remember, I taught you guys market structure, I taught you guys zones, I taught you guys entries and everything and all. I don't know if I'm making sense. Let's say now, for example, now we have something like this. We have this high, we have this higher low. Please, guys, I want you to pay good attention to me. I told you guys that this bad guy up here is a resistance zone. I don't know if I'm making sense. So let's say now, for example, let's say now, for example, as a trader, you are that in a scenario where market come and take out this bad guy up here, this is called the break of structure. Until the body of a candlestick closes above that level. I don't know if it makes sense. Now, as a smart trader, you are, when next you see this next candlestick retracing to the downside with a full movement, like we like say with a forced movement, please don't enter in a scenario where the market is just like retracing with a short candle. I don't know if I'm making sense. The moment you see this candlestick here retracing with a force movement, now you pick up your, maybe if you want to use something like another block or this bad guy up here, that's his flip zone, this resistance and support, or if you also want to use your something like your Fibonacci 2 or something like that, please you start from this lowest week. I always tell you guys, I have my own reason why I always tell you guys lowest week to avoid manipulations on the market. I don't know if I'm making sense. Now you start from this lowest week, you extend to this highest week. I don't know if I'm making sense. Now, I want to just summarize all these things with liquidity sweeps, and liquidity grabs. Now, what are liquidity sweeps, and liquidity grabs? These are just scenarios whereby market wicks below or above your zone. So, guys, like I just say, liquidity sweeps, and liquidity grabs. Please, all these names are the same. I don't know if it making sense. Let's say, for example, now, let's say I say something like liquidity, market has taken on liquidity. Liquidity simply means money. I don't know if it making sense. Liquidity simply means money. I don't know if it making sense. Now, when it comes to liquidity sweeps and liquidity grabs, now these are where most traders find it very, very difficult to understand. I don't know if it making sense. These are just like scenarios whereby market. One sec. Okay, guys, let's continue. Liquidity sweeps and liquidity grabs are just like scenarios whereby market comes and weak below or above your zone. You can also, I told you guys, you can also call it zones, point of interest, and areas of interest. That's BOI and AOI. I don't know if I'm making sense. Good. Before I start pushing to your direction, let's say, for example, now, normally now, let's say you're entering your trade aggressively. The moment market touches this your bad guy, this 0.618, I don't know if I'm making sense. Now you enter your trade aggressive. That's if you're entering your trade aggressively. I don't know if I'm making sense. Now you target this high up here, you target this high up here. Now your stop loss. Please, I told you guys to always give it a breathing space because of liquidity sweeps and grabs. I don't know if it's making sense. Let's say something like during ASEAN sessions or something like that. I don't know if it's making sense. So let's say now, for example, now, normally now, market is supposed to touch your zone now, touch this zone. Market is supposed to touch this zone now and buy. I don't know if it's making sense. So in a scenario where market comes and weak below, I said weak. What am I trying to say? Wicks, that's the body of a candlestick, wicks below this my 0.79, below this my zone. I want to show you guys something. I hope you guys know that from this 0.79 right upward to this 0.618 is just like my zone. I don't know if I'm making sense. Let me change the color for you guys so that you guys can understand. It's just like my zone. I don't know if I'm making sense. So when it comes to what are these liquidity sweeps and liquidity grabs, it's just like a scenario where market comes and weak below. I said weak, weak, weak. That's weak below. Whether weak or weeks, anyone. I don't know if I'm making sense. Scenario where market comes and weak below this my zone. That's, let's say, candlestick wicks below this my zone before I start pushing to my direction. I don't know if I'm making sense. These are where liquidity sweeps and liquidity grabs comes in. So this is just very, very simple. I don't know if I'm making sense. I'm just teaching you guys all this thing for you guys to just know about it. It's nothing much. I don't know if I'm making sense. I don't want you guys to make this very, very difficult for you guys. It's just very, very simple. I don't know if I'm making sense. And another thing I want to tell you guys today, remember that this is just like for an uptrend. Let me invert this chart. This is just like for an uptrend. I think so. Yeah, this is just like for an uptrend. Now let me invert this chart. Now when it comes to a downtrend, it's just like something like it's just like the inverse. I don't know if I'm making sense. We have this bad guy down here. I told you guys you can never call this a lower low. This is still a low. Assuming we have something like this now. Assuming we have something like this. We have something like this. Then this lower high. I don't know if I'm making sense. Now you would have called this bad guy down here a lower low. I don't know if I'm making sense, but no. I don't know if I'm making sense. You cannot call it a lower low until the body of the candlestick closes below this previous low. I don't know if I'm making sense. So it's just like for now, it's still a low until we get that sudden break of structure. I don't know if I'm making sense. Good. So now we have this lower low. Why is it a lower low? As you can see closely, it's just like this is just very, very, very clear. The body of the candlestick has closed below this previous low. I don't know if I'm making sense. Now we have this lower low. So I know I told you guys that in a scenario, let's say you're entering your trade something like maybe aggressively, something like aggressively or conservatively or something like that. Conservatively, conservatively. Let's say you're entering your trade something like aggressively or conservatively. No, aggressively is just like something like once market touches this your zone, you are like it's just like for example, you are selling without no questions asked. I don't know if I'm making sense. Now, let's say you're entering your trades conservatively, just like for example, the moment this market touches this your zone now, you scale down to the 15 minutes time frame and look for either your bearish pin bar, your doji, or your bearish engulfing. That's if you are selling. Then if you are buying, just like the inverse. I don't know if it's making sense. Then let's say, for example, you want to use something like a market structure shift. We can use 5 minutes for that. Then if I'm making sense, this 5 minutes, you can use this 5 minutes for that. I don't know if I'm making sense. Please, if you know that you don't understand what entries and entries confirmation are, go back to my videos. I don't know if I'm making sense. So that's just it. For example, now, the moment this market touch this my zone, normally, let's say you are an aggressive trader or something like that, you are taking your sales. I don't know if I'm making sense. But if in the scenario market comes and weak above this zone, Please pay good attention to me. Most traders find this thing very, very difficult, but today it's just like based off on today, I will explain all these things for you guys. I don't know if you're making sense. So in a scenario, normally market is supposed to touch this zone, then buy, then sell. I don't know if you're making sense. But in a scenario whereby market comes and weak above this my zone, that's above this my 0.79. This is called liquidity sweeps and liquidity grabs. And most of the times, I bet you guys, most of the time, something like this always happen during ASEAN sessions. I don't know if you're making sense. Something like this always happen during ASEAN sessions.